Hello and welcome to ThinkScript Studies on Thinkorswim. My name is James Boyd. We welcome you here today. Michael Fairborn is off. He's probably taking a day off from the rock project we actually did on Wednesday. He's probably a little sore. Anyway, I'm normally the chat person during this session. When Michael is gone, I usually cover for this, and so I'm going to take the reins here today. Now, we'll go ahead and hop right in. We welcome all of you here today. Will, welcome. Luke, Rocky, Life in the Fast Lane, Chris B, Buffalo, Kevin Baker, welcome. Wiley and many others. Wiley, I've seen a lot of funny dog videos lately on X, and hopefully you've seen a couple of those. They are pretty funny, especially on Friday afternoon. Now, just real quick, you can follow us on X, my handle, James Boyd CS. And we also have John McNichol with us. You'll see his initials as JM. And we welcome him. So if you have any questions, John and I used to teach in-person events together. He's very well versed. Just try to ask him a question where Johnny does not know. He knows most everything. So now, remember as we get started here, remember that equity and index options carry a high level of risk, not suitable for all investors. We will not talk about index options. We'll talk about maybe stocks and or equity options. Also remember that the information provided here is for general informational purposes only. Also want to give us a quick reminder that Schwab does not recommend the use of technical analysis as a sole means of research. Okay, there's other types of research that we talk about. It's actually helpful, I think, to actually use as much type of analysis you can find. Okay, fundamental, intermarket analysis, macro analysis. Try to use it in combination to kind of give kind of some legging, if you will, to your decision making. Now, also, we will use the Paper Money software application. That'll be an important piece here today because we're going to talk about scripts on charts. And also remember when we talk about investing involves risk. And also, you should be aware of kind of what that risk is and maybe additional risks that you might not be thinking about, like setting stop orders, etc. Now, we're going to talk about here today. I want to kind of show you something. If we went back to this here, so first off, this class is being recorded, okay? We, except for the ETF classes, we actually post the classes in one of two areas. This first area being on YouTube. We actually have a channel called Trader Talk Schwab Coaching Webcast. The link I sent to you will take you to this page. You can click on the subscribe button right in the middle of the page. Simple, okay? Just click on it, click subscribe. And it's for free. Now, second thing is, if you did not catch the video that we did last time, I would ask that would be kind of first step of your homework assignment here today. We went over some of the scripts, okay, that we actually use on the Market Watch tab. I kind of talked about why an investor might use those, how do they work, etc. And so I talked about that. And that's a 45-minute video, and it's better than the things on TV. So make sure that you watch that and you're comfortable with it, okay? Now, today what I want to do is I want to focus a little bit more on using the scripts on the charts page, okay? Now, it's possible to have this view right here and still completely miss the setups. Now, shocking, but I want to make sure that we take our teaching on scripts to the charts. And that's what's interesting about scripts. Scripts is not just, let's say, on the Market Watch. It could be on the charts. It could also be on the left sidebar, etc., and on the monitor page. Now, I also want to make sure that this page right here, this is going to take us to the playlist for this class. So if you said, hey, where can I get the playlist for this class? I want to save this, okay, which is a good idea. Just bookmark it right at the top. Just click on the little star, and that way you don't have to find it again. You just click on the star, and it saves the classes that you're interested in, and you can see the running list of classes over time. Now, what I want to do here is I want to kind of talk about just briefly where the market is, and then what we're going to do is we're going to talk about, I'm going to share with you 3 chart views, okay? From those 3 chart views, we're going to really focus on 2 of them. And what I want to do is I want to show current examples using those charts and also stops, okay? And then we're going to look at past examples of using the charts and kind of some learning lessons. Now, I'm expecting from this discussion, there's probably going to be some questions. So I want to make sure we answer as many questions as possible, especially when I show you some things that I don't normally show you. There's a lot of things I like to use that I don't show you. They're just personal, okay? but I like to kind of show you some things that are going to link the chart to the Market Watch quote page, okay? And also it's going to give you a visual of what we're really referencing a lot of the times. But I want to share the chart with you. Now, let's go ahead and just, before we look at some things, I'm just going to take a quick look at where the Dow is. Can anyone actually kind of tell me what you see on this chart? What do you see on the chart? Well, I mean, if we look right here, I mean, we started up lower yesterday. The open pretty much was the low, and we fired right back to the upside. Okay, close higher. Bullish engulfing day. If you actually look at this, this is another short-term high. I'm sorry. Okay, Groundhog's Day again. Another short-term high. And really, if we also take a look at, let's say, the Russell, you are also seeing that same kind of right in that area. If we close here, this is the highest close we've actually done in the last, let's say, 2.5 months on the Russell. Now, Kevin and I talked about that. You're going to see that the NASDAQ has been leading the most, followed by the S&P. Then you actually have the Dow and the Russell 2000. Okay. Now, if we also take a look at where the VIX is, we kind of talk about maybe some tailwinds. And we actually did some discussion on this from Lisa Jack's conversation. We have the VIX down here almost at 16. Oh my heavens. I never thought I'd say that again. Okay. We're close. 1729. When the VIX is low, stocks tend to be actually moving to the upside. Okay. Now, some of you could be enjoying that in the paper money account, and you're saying, James, blowing on the VIX is helping my stocks go up. I'm not sure if that works, but if it's been a lucky charm, keep blowing on the chart. Okay. Now, what I want to do here, so that's kind of just a quick gist of where the market is. In terms of the sectors, we'll come back to that in just a moment. Now, what I want to do is I want to kind of share a chart with you. And what I want to do is I'm just going to pull up the DJX. And this chart, if you say, James, I don't normally come to your classes. I come to Mike's classes, but you're teaching today. I don't have this chart. I'm going to share this chart with you. This is our standard whole moving averages. Okay. The shorter term one, the closest to the current price, is the 10 and the 20. Okay, and there's a shading there as well. And we have a MACD histogram, and that setting right there. I went back and put it back because I was kind of looking at that. I put a medium setting, and that setting right there is an 817.9. Now, if you are a shorter term type of trader, you might even move that down to an 817.9. That's not going to really be the discussion here today, but if you want that, I'll put that back. And I saved it, so when I share this with you. So this is the first kind of home plate chart, stripped of anything, okay? Now, when you come to this class, you're probably thinking, well, how does this relate to scripts? Well, like we talked about last time, these dots on the chart, there, those are called hold scripts, close above the high of the low day. You also know in our classes, we talk about, really on the Market Watch page, we talk about, for example, let me bring up a Dow list example given. We bring up these columns, and example given, we have 20-day highs on the Market Watch columns. We have the 55-day high. So we've seen that before, right? Well, what I want to do now is I want to kind of visually put that on the chart. Now, I've taught for 20, 25 years, and sometimes I might say, hey, did you see that set up on the chart? And the person might say, no, I did not see it. And that always baffled me a little bit. I'm like, how did you not see that? Like, so the point of these moving averages is to help see the transition of momentum up or down. The point of the whole dot is to see the bullish bounce setup. Visually seeing the gap on the chart, you could see that yourself. There's a gap. But I wanted to kind of take it to the next step and then link it to the Market Watch page. Now, if Mike is gone again on Friday, the next step that we'll do is we'll actually talk about scripts on the monitor page that are helpful, okay? Now, to manage positions. Now, I'm going to go forward here one step. Now, what you're now going to see really on this chart, when I pull up the DJ, I have the DJX here. Now, don't worry, I'm going to share the chart with you, but let me explain it first, okay? Now, what these dots are, okay, this is really And by the way, you might be wondering, well, how would I know that myself? I mean, if you didn't tell me, how would I know? Well, if you right click right on that orange line, right click, it will say 10-day high. Okay? And I'll talk about why the different time frames. The blue line, if you right click on it, I'm going to share the chart, 20-day high. If I right click on the gray dot right there, 55-day high. Now, you could probably imagine if I said to you which one is more aggressive or which one is more sensitive to price. Well, clearly it'd just be the one that's the 10-day high. The 20-day high, the first time we actually hit the 10-day high was there. The first time we actually hit the 20-day high was probably about right there. And how we hit the 55-day high? Not yet. So think of the 10-day high, I'll label those now, 20, and the 55, okay? So if you said, James, I am a shorter term investor, what does that mean to me? If I said, hey, we're looking for a 10-day high, 10-day high, you're probably looking, maybe you're trying to, a 2-day trade perhaps to maybe 2 to 3 weeks. That's the sweet spot. Does it always work like that? No, but that's what you're trying to probably do. If you actually said, James, I'm looking for that 20-day high, you want more confirmation, and you're probably really looking for that same type of setup, maybe even more intermediate as well. So it might be trying to go 2 to 3 months, okay? Now, if you said, James, I'm looking for an entry of the price above the 55-day high, man, you want confirmation of confirmation of confirmation. And always remember, the confirmation is not free. The price has to come up to, and it needs to probably come up a lot, okay? It might, in this case, if we go from the first time the price hit the 10-day high, we were at 409. We would need the stock to go from 409 to 440, about 8% difference before we actually saw the price get to the 55-day high. So which one you use will depend upon what type of trader you are, okay? Now, in our class examples, we're going to focus on the 10 and we're going to focus on the 20. Now, in the recent examples, we have talked about a lot of stocks that really had like an ascending triangle coming off the bottom. The reason why I say it like that is usually ascending triangles are after uptrends, but in our market, we had a lot of stocks that were actually kind of like showing ascending triangle patterns, which really look like tilted up W patterns, and they really broke to the upside, okay? So this is the purpose of the 10-day high, the 20-day high, and the 55-day high is to visually see breakouts. Now, here's what I didn't like, okay? If I ask 10 people, hey, what do you see on the chart? I might get 7 or 8 different answers. But if we just ask a specific question like, hey, if we're saying that the orange line or the blue line is meeting the criteria of a breakout, did the price trade to and or close above that level? Yes or no? It's more of a binary outcome, not like, well, it depends on this, depends on, no, it's not depends, okay? Did it trade at that level? Did it close above that level? Yes or no? And the purpose of that is to try to help people make a decision for their own sample plans. It's very important because a lot of times what happens is just sometimes investors are afraid to kind of make a conclusion, okay, at that point in time. Now, what I want to also do is kind of show you something, okay? So what I want to do, I don't want to go to the next chart yet, but what I want to do is I want to kind of show, like, if someone said, hey, James, could we try to find stocks that were actually hitting these 10-day highs? And I want to kind of point something out. If you look at when did the Dow Jones hit the 10-day high, it was right there, okay? The very next day, it hit the 10 and 20-day high. So if you're at a 20-day high, then most likely you would also be at a 10-day high. And those lines can overlap on each other. Does that mean it's better? No, it just means it's at a 10 and 20-day high, okay? Now, what I want to do in this case is I want to look for an example of a stock that could be breaking out, okay? So now let's say we don't have a watch list. Let's say the only list of stocks we had, if we had one, was the Dow Jones itself. Well, let's visually look to see if it's breaking out. Now, if I pulled up a stock, I'm going to use Triple M, okay? And if I looked at Triple M, and if I just ask a question, is it breaking out? Definition of a breakout could be price trading at and or closing above the 10 or 20-day moving average. And what you're going to be noticing on the chart is it's trading right at it. Now let's stop for just a moment, okay? If someone were to ask you, they knock on your door and they ask you specifically, what is your entry setup? Now, we know that the whole moving averages, we have what we call a 1, 2, 3 methodology. And it kind of depends upon how aggressive you want to be. Now, if we said, hey, James, I like to kind of really wait for, and let me explain what that really is. If someone says, James, I want to get in on the first time we're seeing some type of turn in the price, well, I just labeled what number 1 is. Number 2 in this case is you already had really the 20-period moving average green, and the very next day, 3 was the crossover. If you get in a push up in price that's pretty aggressive, you could actually get all that 1, 2, 3 in the same day if it's pretty aggressive. That's not always going to happen like that, though, okay? But that's what we mean by that. Now, the second part of this is we could also have, well, that's one way to get a potential entry setup. The other way is really what we talked about prior, which is these are what we call bounce setups, okay? And really, if you take a look at this, you had a down day, close higher day, and then today at the open was what? What do we call that? If we have a down day, red candle, close higher day that's not cold, okay? And the very next day we gap to the upside, what do we call that? Well, that's your gap entry, okay? If the investor is trying to buy based upon pre-market buying or buying at the open where it's gapping above yesterday's price, that's what we call close higher gap, okay? Now, if we kind of go back to like kind of the breakout, okay, that breakout could be 10, 20, or 55-day high. In our example, we're going to really focus on the 10 and the 20-day high, okay? So notice it doesn't take a whole lot to write it down or explain it, thank heavens, because the simpler we make it, the greater the chance that maybe the investor could practice it, okay? Now, what I'm going to do in this case is, let's say the investor says, James, I'm going to buy the stock. And by the way, you could go back and say, well, James, you could have bought it here, you could have bought it here, you could have bought it here, but I'm not there. We're here now. And what we're going to do in this case is we're going to right-click on the chart, and what we're going to do is go buy custom with stop, okay? Now, a lot of times what investors will see is where the stock ran to the upside, and where did it pull back to? Are we on the same page that this pullback went to 145? Are we on the same page there? We good? Now, investor might say, James, I'm going to take 145 less 2%, and that's where we're going to set our stop. So if we're using this methodology of a new high visually where we can see it on the chart, we're going to take actually bullish entry and set the stop below 2% below 145. And that's it. The investor is trying to see if that stock can continue to the upside, okay? Now, what I'm going to do now is if I showed you a couple others that were, now, by the way, so if I looked at, let's say, Nike, you're going to notice that Nike is also one of those stocks. Let me delete these lines off. Nike is one of them that was going down, and we got nowhere near the 10-day high. And what does that mean for a bullish investor? What it means for a bullish investor is they don't have an entry setup. Now, if I go farther to the right, at what point does it start to show a basing pattern reversal? Well, if you take a look at this chart, you're going to notice that we got close twice, 3 times, but we never really traded to it or closed above it until the date of, okay? And my goal here is I want to show you a number of charts to see how this works, okay? So on 5-7, we finally got the stock to go to the orange moving average. Notice the 20-day high was right there. And if we go to the very next point, it hit it again. So if that stock starts to reverse, the 10-day high should catch it first if there's not a huge move to the upside. And obviously the 20-day moving at 20-day high should probably not be that far behind, okay? So really you had the first entry, 10-day high, second day high right there. And if you look at that, did we get the 55? We're nowhere near it. This is why a longer term investor, they don't have very many entries or exits because they're waiting for kind of some extreme moves up or down. Now, if we go back and kind of, let me say something real quick. Just because the entry was there for the setup, does that guarantee the stock's going to go up? No. Any entry that's taken is just a setup. I like to think about it like baseball. The pitcher throws what we deem to be a strike, and the batter tries to swing and connect the bat to the ball. Just because if we were to hit it does not mean it's a grand slam. You do not know ahead of time which one is going to be a ground ball, a whiff, or a home run, or a grand slam until you swing at it. Now, if it's a grand slam, you'd have to have 3 people on the bases. But you get my point, okay? So stop thinking that we're going to know ahead of time. We don't know ahead of time, okay? Now, if we go back and take a look at this, okay, great. That's before. But where is it now? Well, what you're going to notice is today, again, we saw the stock hitting a brand new high. Now, the reason why I kind of made these charts is what I found was, even though on the market watch it would show Nike 20-day high, a lot of times there was like a disconnect. Maybe they weren't reading the kind of the column headings and interpreting what that really meant. But now if you bring up the chart all of a sudden, you can visually see what's going on. Number one on the chart, we see close above the high of the low day. If we actually went back to kind of what we talked about, is the price above both moving averages? Yes. Are the lines green? Yes. If we take a look at, are we having a hold? Yes. Are we actually hitting or trading at, or closing above, trading at the 10, 20-day high? Yes. It's a setup, okay? So in any setup, the investor is saying, how much capital am I going to risk? And also with that, how much am I willing to risk, okay? How much are we willing to risk? So notice on this that the investor said, hey, James, I want to consider an entry. Same thing that we talked about before. This has really had a little run to the upside, okay, and a little pullback. What's nice about the pullback? Well, what's nice about the pullback is it provides a spot where the investor might say, I'm going to set my stop underneath the 60 threshold. Now, today, I don't know if it's going to be my point to really see how many trades we can do, because I want to give you examples of many entries and current management and exits using the methodology, okay? But that's another example of Nike. Let me show one more just real quick, and then I'll give you a little sample list as well, okay? Now, if I were to, let's say, look at a stock like SWH, SHW, excuse me, one of them that's kind of getting very close. Now, what you're now going to notice is Sherwin-Williams has had a run to the upside as of late, has had a plateau of support, okay, double bottom, if you will. Now, I know how you feel. Man, I love double bottoms, but sometimes they happen at bottoms. Sometimes these W patterns can happen if you have like a bull flag. A little consolidation, and you have a horizontal support. And what you're now going to notice is it's not going to take a whole lot to really break out to the upside. So if you pulled up Sherwin-Williams, which by the way is in the Dow, there's only 30 stocks. Don't tell me you're too busy to pull up 30 stocks. Nobody's that busy, okay? And if you take a look at this, if this stock pokes at the 365.57 level, that's where the investor might say, I'm going to practice a buy stop order, which we talked about Wednesday and Thursday. They also might say, James, I'm going to do like a buy stop limit order and set my entry if we got at or above that price right there. Maybe the investor think it's going to try to break out to the upside. Sherwin-Williams might be on a short list starting the week next week to see if it can't break out. What's awkward about it is it went from support to resistance in almost a day. The shorter the duration, the greater the likelihood that it might try to break out. Sherwin-Williams is going to be something we're going to watch on Monday and Tuesday. Could it hit that high? Now, what I want to do is I want to take you to this next chart, okay? Now, how many of you have ever had you got in positions and then you said to yourself, like, I don't really know how to manage the position, or I don't really know how to set my initial stop, or I don't know how to adjust my stop? Okay, and I think most of us would raise our hand twice, okay? Now, one of the things is there's nothing wrong if the investor says, James, I'm going to use the higher low, which I showed 2 examples of, as a place to set the initial stop. Or you might say, well, James, I'm going to set my stop below horizontal support. Nothing wrong with that. Or I'm going to set my stop below the diagonal support. Fine, okay? And that's typically what we show. Now, what I'm going to show you now, think of this as we got the trade off the ground, and now the investor is saying, well, now how might the investor see where the stop might be, maybe after a couple days? So a lot of people are visual people, okay? And the next chart I'm really going to show you is going to have the 10-day high, the 20-day high, and it's also going to have the 55-day high on it. Now, what I'm going to do in this case is I'm going to now zoom in on a couple examples. And if you don't mind, I'm going to bring up IBM, and let's kind of use this as a starting point. I'm going to take off any lines we had before, and I'm going to go back to the date on this chart, and let me explain what this chart is showing you. Now, let's imagine the investor said, look, on 5/5, they took a bullish entry. Why did they take a bullish entry? Well, it goes back to the 3 things we talked about. Number 1, the whole moving averages. They had a green color on the moving averages. And you're going to see that it was a day after the bullish bounce. Now, that can be the case sometimes that you said, James, I saw an entry set up, but I didn't get in until the next day. Okay, that could be fine. But you're going to see on the next day, it did actually go up and trade to and close at the 10 and the 20-day high. Does that make sense? All right. Now, if we were to look at this chart, we might say, if I were to ask you the question, Dean, Sri, James L., James Connors, Vic K., if we were to take an entry right there, where might an investor set a stop? Well, they might say, James, I'm going to set that stop right underneath maybe this little plateau of support, maybe 236. So again, we're not leaving that concept of seeing where the higher low is, seeing where the support is. Think of that as your initial stop. Now, what you're now going to notice is below, that's different than what we saw before, is you got like a white line, and you got a red line, and you got a yellow line. What is that? Well, let's right click on it. I'll share the chart with you in just a second. So this right here is an 8-day low. I'll explain why 8, okay? If you look at the red line, it's 10 days. So what it does is it goes back the last 10 days and plots on the chart where the 10-day low is. Talk about why in just a moment. And the yellow line, you're going to see, right click, 20-day low. So it goes back 20 days ago. And what you're now going to see is it just goes back 20 days, says what's the lowest point in 20 days, and plots that line on the chart. Now, so we talked about the white line there really being the initial stop. But when does the investor maybe use these trailing stop lines? When do they use it? Well, they use it, or consider to use it, when you actually start to go above your initial stop or support level. So what you're now going to notice is all of a sudden, let me change that line so there's no confusion on the color, okay? I'm going to make that one, let's go to the fuchsia color, or pink. So the pink line right there, that was really our initial support level to set the stop underneath. Are you with me? Okay? So that was like your initial stop for a couple days, really like the first week-ish. Your 8-day low, about a week and a half into that trade, the white line got above the initial support area. The white line is visually showing where the investor might raise their stop up to on their stock and or option position. Now, if we go forward here, what you're now going to notice is the white line goes up again. If you said, James, I'm going to use a 10-day low, that also eclipses really that initial support area. And what you're now going to notice is that's where these lines are. Now, the first thing I want you to notice is you're going to see that the 8-day low is 22 points lower than really where the current stock price is now. So that might seem like unreal, but what you're trying to do is give the stock enough breathing room that if it were to pull back, that it can pull back some without having a greater likelihood of being stopped out. Now, historically, I've used 5-day lows, 7-day lows, and of course, if we win a 5-day low, you have a statistically greater chance of getting stopped out because it's close to the current price. It's only looking at the last 5 trading days. I have also practiced and back tested using 7-day lows, and it does give a little bit more wiggle room to it, okay? Less chances of being stopped out, but it's still higher chances of getting stopped out. If we went, let's say, an 8-day low, it has better chances of actually allowing the stock to exhale, consolidate, pull back, whatever you want to call it, and try to still ride that trend. Now, here's what I like about the lines. If I asked a whole class of people, 300 people, hey, where would you set your stop? You're probably going to get 100 different answers, okay? So if we were trading a system, like we're talking about here, James, I want to get in when the stock hits a 10 or 20-day high, and I want to sell when that stock hits an 8-day low. Well, that's pretty cut and dry, okay? Or, James, I want to get in when we actually hit a 10-day or 20-day high, and I want to sell when the stock actually hits the 10-day low. I mean, that's pretty cut and dry, okay? There's not a whole lot of here's what I think, which, by the way, what I have found out, when the investor tends to leave themselves out of it, it's amazing how the trends tend to be a little smoother. Okay. That's kind of sad. I realized that for myself. And I realized, James, it doesn't matter what you think. And that hurt my feelings for a day. And then I realized, yeah, it doesn't really matter what I think. Okay. Now, so on IBM, the trend is still going. Now, you know exactly what I'm thinking, which is you sure hope over the next couple of days we consolidate and the 8-day low really gets a pretty substantial jump up in level. Now, let me kind of show you something else. I'm going to fast fire a couple, okay? If I looked at, let's say, ZS, and I said on the date of 4/25, okay, that the investor said, James, I'm going to really take that little 10-day and or 20-day high. Well, it would have probably been somewhere there or the previous day there. Now, remember, we don't know the future. If someone said, where's my initial support level and or higher low, it's probably right around 194. So I'll repeat something to make sure we're crystal clear. The investor is using the initial higher low level and or support to set the stop initially. But when these lines below get higher than the initial support level, then they're actually using those lines to consider in moving up the stop adjustments mechanically. Now, could they do it intraday or do they have to wait until the end of the day? The answer is yes. Wait. Yes to what? Intraday and at the close. Okay. They could do both. Okay. Now, if we take a look at this, notice that stock shoots to the upside and the 8 and the 10 period moving average were kind of neutral. Now, the hardest thing to do is to let the trend go. Now, don't laugh when I say this, but I kind of felt like I was choking with my hands the stock trend and trying to tell it to breathe at the same time. I'm looking at you. If me and you are cousins, I know what you're doing. because I would say, go up trend. And I was like choking the trend by setting stops that were so tight that I was more successful in actually getting stomped out than riding the trend. Now, what this does is it says, hey, look, if we start to go up, now notice that the 8-day low gets higher than the initial stop. The investor might raise up the stop. They can visually see where that is. And now what you're going to notice is if that stock actually goes up and consolidates, there can be a big jump in the stops. And if that stock actually goes up and the lows are increasing, that was the low stop for one day. This was the low the next 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 day. Now, I had a guy one time tell me, well, James, moving stops, that's a lot of work. I couldn't let that go. And I asked him, what do you do for work? Okay. And I was like, it sounds like that's a lot more work than adjusting a stop, which if we're talking about a stock trade, we can move up the stop on a stock trade right on the chart in about 3 seconds. So, be careful what we're saying here, because really, if we're talking about a stock trade, sliding up the stop, that doesn't really take a whole lot of work, which, by the way, this is work. Okay, not scared of work. Okay. Now, if you take a look at where it is, that 8-day low and the 10-day low is right at this level. Okay. Now, here's the deal. If you said to me, hey, James, I want the 5-day low, I want the 7-day low, that's what I want for myself. How do I do that? How can I change that? You can right click on that line, edit, study. And what it does is it's going to take it back to days back, let's say 5. And if I did that, it's what you'd expect. It would just make it a lot closer, okay? And if you want to also kind of go back to right on click on the test tube, you can also go back. This is the way I like to do it. If you say, hey, where's that 8-day low right there? The way I like to do it is click on that sheet of paper, and you could just say, look, instead of actually 8 days, change it to 5, okay? If you want to name it again, take the 8 out and just put 5. That's if you wanted to do that, okay? That's the way I like to do it, okay? And I'll put that back. All right, now let me share this with you, okay? So what am I sharing? So first off, the first chart was the standard whole moving averages with the Cahole dots. Fine, that's our standard chart that we like to use as a base. If someone said, James, I would like to see the breakout levels, which is the duration of time, on the chart itself so I can see the breakout, and then if someone says, did you see the breakout? And you said, no, I didn't see it. We're going to stop that now, because if the price goes to that level and or closes above that level, that stock at that duration of time, at that point in time, it's showing a breakout. Now, also, if someone said, James, I'd like the idea of being able to mechanically move up my stops based upon the day's lows getting higher, if it was the trend, we could actually kind of get an idea of where those stops could be given how tight or what type of investor you are. Now, what I'm going to do is I'm going to kind of share this. Now, forgive me, okay? Forgive me for the name, but I like to call this the package. So in other words, a lot of times technicians like to have kind of certain charts that they use quite a bit. And this chart really is just kind of a nice general chart. This kind of brings it all together with bounces and breakouts. And this chart is really managing current positions, okay? Now, what I'm going to do is let me share this grid with you, okay? Share it. And what I'm now going to do is I'm going to send it. Yeah, and if I send that grid, let me show you how to put it on, okay? Now, by the way, if I, for example, went to, let's say, this column right here, what you're now going to notice is right here, you're now going to notice the 20-day high and the 55-day high. Just because we visually see that, for some investors, it doesn't necessarily connect that we're actually really seeing a breakout on the chart. That's what I found. I found that if I actually put the lines right on the chart, that people are more apt to say, oh, look, it's breaking out, okay? So that's kind of the point of this. So if I pulled up, let's say, a stock like GS and it's hitting a 20-day high, we should see the stock trading at and or closing above really that high. There's Triple M. That's how I got that example. And look at what we see, the credit cards. Okay, Travelers, that's another one. And if I pulled up Travelers, what you're now going to see on that chart, if I pull it back up, Travelers, if I pull this back up, what do we notice? Hitting the line. Okay, there it is again. Now, this is a little unusual, okay? If we see a stock that is hitting the 10-day high, the 20-day high, the 55-day high, and all three lines are on top of each other, does that mean that this is a triple grand slam? No. It's just saying, look, on shorter term, intermediate, longer term, it's hitting a brand new high, okay? And if you take a look at this, we've talked about credit cards for about a week and a half now. There's, whether it's Visa, MasterCard, Travelers, Discover, Capital One Financial, and I'm missing one, but in that space, there's been a lot, American Express, there's been a lot of those cards that have led to the upside in the financial space. Now, how do we put this chart on? Okay, so I want you to have this, okay? If someone said I'm investing and I'm trying to trade bounces and or breakouts, the problem is you're kind of relying upon your knowledge level of maybe being someone who's been investing for 2 or 3 years, 5 or 7 years. The truth is it can take some time to really learn some of the principles and practices we talk about. The purpose of the scripts, while not guaranteed for accuracy, is to try to help you see and identify the setups. That's the point of this, okay? Now, and also it's trying to help you see where to maybe consider moving up the stock to, and so on. Now, what you're now going to see is we're going to go to the very tip top, go to setup. We're now going to go to open shared item. And if I click on open shared item, click on that, we're just going to copy and paste in what I sent to you, okay? Now, what you're now going to see is I'm going to copy and paste. I haven't saved anything. I'm just going to say preview because that's the only thing I can do, and then import this. Okay, now, it's kind of a classic thing with a computer. I got it up on my computer. How do I save it? Well, let's do this, okay? So here's what I brought up. I copied and pasted it, click preview, and then I opened it. Here it is. I'm going to make this full screen now, right there. Click. But how do I save this to my computer? Well, I'm going to click on those little 3 boxes at the top right. Go down to where it says Save Grid As. Okay? And what I'm going to do is I'm just going to call this Webcast. Okay? I'm going to call it bounces, and breakouts. Okay, now, where do we find it? So if I have a grid like this, how do I find it? Well, if you go up right here to the 3 lines right there, this one or this, it doesn't matter which one you use. If I click on that 3 line, I just want to click on that and say, let's maximize the first chart. Now, notice what this does is you're going to see that we're in the first box of 3. Okay? So the whole key of this is if you say, hey, James, my chart doesn't have the lines that you should. Well, we're in the first box of 3. How do you get to the second box? You're not going to believe it. There's a forward arrow right there, and we're just going to click on it, and we're going to go to the second box of 3. La la! Okay, now, if we say, well, how do I get to the third box? Well, if I went to the third box and I want to see where the lows are, click, and they're right there. How do I actually go back to all 3 grids? And then we just go back to the hook arrow, which takes us back to what we saw before. Well, that's not that bad, okay? How do I go back to the one chart again? Click on the 3 lines, maximize the grid cell, and there it is, okay? Now, here's what I want you to do, okay? I want you, here's what would be really sad for me. If I saw you in the airport, okay, 2 years from now and said, James, I really struggle with bounces and breakouts, it would tell me that you did not watch this class. Because if you watch this class, what we're trying to do is we're trying to launch you into that learning and application sooner and not relying upon can you, by yourself, identify the bounces and the breakouts? That's the purpose of this, okay? Now, what I want you to do is I like you to also, number one is make sure your market watch is set up like we did the last time. Second, I want your charts to be set up. And over this weekend, I want you to be looking for some stocks that are really hitting 10-day highs and 20-day highs. I want you to practice setting up your initial stops like we talked about, like we normally talk about. But I want you to use the 8-day low as a stop adjustment only when that 8-day low goes above the initial support area, like we said 3 times, okay? And I want you to practice kind of just doing that. Buying on a 10, 20-day high, selling actually on an 8-day low. And practice that over and over and over and over and over and over again, okay? So that's what I want you to do in practice. Now, if you said, James, I like the 10-day low better, that's fine. Practice on the 10, 20-day high. Practice selling actually on a 10-day low in the paper trade account. And I want you to get practice as far as doing a specific routine. This is our criteria that we're using for entries and or exits, okay? Now, I'm out of my time here today, but that was my goal of what I really wanted to get through. So you got some homework here to do, but it's specific. And notice with this activity, it has nothing to do with what your thoughts are, okay? It has everything to do with what we're seeing on the chart and then applying that in terms of practice in the paper money account and then executing the sell, okay, if it were to drop. Now, we haven't said anything about targets. If you want to use targets, that's fine. I'm just practicing on mechanics right now, right? So with that said, remember with what we discussed, it was done for example, illustrative purposes only. Stay tuned for Ben Watson coming up next, and thanks to John McNichol in answering those questions in chat. This has been the class on ThinkScript Studies, using ThinkScript Studies on the charts, and also matching those back to the market watch as well. Stay tuned for Ben Watson coming up next, and have a great weekend. Take care. Bye-bye.